Are your taxes going to be going up in the future? Today we're going to be talking about the 2025 budget proposal that talks about more than doubling the capital gains rate from currently around 20% to potentially over 40%. We're going to talk about what is the likelihood of that happening, and then what does it mean for you as a long-term investor on how you should think about taxes in your portfolio. Okay, so why is this happening in the first place? Why is this new budget proposal coming out? Well, the term budget, right, is discussing the government deficit. And so currently, the government has done some spending. We are currently in a $1 trillion annual interest payments just to service the government debt. That's a lot. Now, how does the government start to get this under control? If they do decide to get this under control. Well, they can reduce expenses or they can increase income. What does it mean to reduce expenses? If you want to reduce expenses and you're the government, you have to start managing some of these entitlement programs, which is one of the larger ticket items. Now, what is the likelihood that the government is going to come in and get votes to reduce Social Security or make meaningful changes, Medicare, Medicaid, reduce defense spending, all these things. Now, this is not a political discussion. This is just a discussion around finances. It's not incredibly likely that they're going to be able to meaningfully reduce expenses. So what's the other side of that coin? Income. Well, or revenue. How does the government generate more revenue? They increase taxes. Now, if you look back historically, where we are currently, tax rates are fine. They're not historically high. In particular with capital gains rate, they're about as low as they've ever been. And so if they were to increase, this is not an exorbitant number relative to history. So it doesn't make it highly unlikely and something we've never seen before. And so when you're thinking as a long-term investor, what if capital gains rates or investments on your long-term gains go from 20 to 40%? How should you be thinking about that today, knowing that could be a possibility in the future? Well, you could be looking at your portfolio. The markets have been doing quite well over the last several years, and you could be sitting on some gains. Now, of course, no one wants to pay taxes ever, but you could be looking at this and saying, should I be paying my taxes now? Should I sit down with my CPA and my financial advisor and have a discussion and say, are these taxes that I should pay when I know I'm going to be at this potentially lower rate today? Or do I want to continue to let these taxes compound and increase the tax burden, right? That could more than double in the future. Now, this is not guaranteed to happen, right? This is not guaranteed to double or even go up 1%. But what we do know is based on history, it's probably not going to be decreasing. So if you look at your tax liability today, right, whatever your capital gains rate, and again, talk to your financial professional, but have a conversation and say, what's the likelihood of it going down? And the answer is probably going to be pretty low likelihood. Now, what is the chance of that number potentially going up in the future if I have these long-term gains that I've been sitting on and it's continued to increase? It's not zero. In particular, when you're dealing with a government that is going to need to generate more revenue, and the place that they're already discussing that they're going to be getting that from can be investment dollars, long-term capital gains, and those types of assets. And so, again, get with your professional team, have a discussion, a realistic discussion around, here's my tax rate now, what does it look like in the future, and should I be making proactive decisions to pay taxes ahead of any changes so that way I'm not stuck paying a higher rate. I hope you found this helpful, and as always, thanks for investing your time with the Personal CFO.